Hello everyone, this is the pre-market report video for today, May 24th in the Indian stock market in terms of Nifty and Bank Nifty. Day before day night in the US, same time yesterday morning in India, regarding debt ceiling issue between US President Biden and McCarthy, another round of negotiations concluded with no progress. After the negotiation in the press conference, McCarthy has highlighted that a deal needs to be finished out this week in order to give Congress a time to vote on it before the US government run out of money. However, both Biden and McCarthy were optimistic that they will eventually find a path to lift the borrowing limit over 31.4 trillion US dollars. Yesterday, this uncertainty and confusion made all the major countries' stock market, including Europe, China and Japan, to close negative except Indian market. So last night before the US market opening, the global momentum was significantly deteriorated. Thus, all three US major index opened slightly negative. Then, during the market hours, around 10 o'clock Eastern Time, US Census Bureau released the April month new home sales data. As we all know, at present, the new house mortgage rate in Western world is over 6%, which is usually less than 2 or 1% annually. Despite that, the number of new house sales increased for the third consecutive month, and in the last 6 months, it dropped only 1 month on February. The new house sales number comes as 6,83,000 compared to 6,56,000 in the March month, which is a very good number and showing the strength of the housing market in US. In addition, roughly at the same time, S&P Global released US composite PMI data for the May month, and the data comes as 54.5 against expectation of just 50. Here we know that anything above 50 means expansion, and over 54 number is a very good growth and faster expansion. These two super duper data along with the James Bullard interview on Monday, which we discussed on yesterday's pre-market video, increased the interest rate fear now. I mean, it's understandable Fed is very against super strong housing market. Please have a look at the Fed monitoring tool. It's like a roller coaster. On last Friday and Monday, the probability of interest rate pausing in the next FOMC meeting increased from less than 60% to over 85%. Now, yesterday, after those two good macro data, that interest rate pause probability dropped again to 60% from near 85%. This in turn, during the US market hours, increased the 10-year bond yield to over 3.75%, but after the market close, it slightly dropped below 3.7%. Anyway, that's a different story. And that sudden bond yield increase hurts all the tech stocks. For example, Apple, Google, Tesla and Netflix all dropped over 1.5%. So the damage was already done. I'm kind of bored now for keep on saying debt ceiling issue, but that's a fact. This debt ceiling uncertainty and further interest rate hike fear made all the US market to close negative. At the end of the day, Dow Jones lost 0.69%, S&P 500 lost 1.12% and Nasdaq down by 1.26%, whereas VIX increased over 7% and moved above 18.5. In terms of oil, Saudi Arabia's energy minister warns the short sellers that they raised the prospect of further OPEC plus oil production cut. This statement increased the oil price to near 2%. At the time of this video, WTI crude oil was trading near $73.5 US per barrel and Brent crude oil was trading near $77.5 US per barrel. Coming to Indian ADR, almost all, both IT and both bank stocks closed significantly negative. I mean, in Indian market yesterday, only HDFC Bank closed marginally negative. Other three stocks were closed positive. However, in ADR, Wipro and HDFC Bank closed over 1.5% negative. It's completely not good for both the sectors today. Regarding HX Nifty, at 3 am Indian Standard Time, it closed near 18,285. As we are very close to the monthly expiry, at present, it's just 20 points premium with the spot market. Thus, this indicating over 80 points gap down opening today. That's all about US market. Now let's move to the next topic. As I said earlier, yesterday only Indian major index closed positive, even though in that too in the last 1 hour Nifty dropped over 100 points. But still, FII was net buyers. The net bought for near 180 crore rupees and DAI net bought for near 400 crore rupees. Despite all this Nifty, Bank Nifty resistance at higher levels and global negative momentum, FIIs were keep on buying. This is very surprising and significantly very positive. Anyway, that's a fact. Moving on, not so good news. Reliance Retail announced the layoff of over 1000 employees, but for some reason, still in the GDR, Reliance Industries closed over 0.73% positive. I'm guessing GDR is reacting to Shane Reliance partnership. About quarterly results, Ashok Leyland's standalone profit decreased around 16%. However, their consolidated profit increased over 5 times. And their consolidated revenue also increased by near 33%. So overall, I consider this result as very positive. But just for info, in the last 1 month alone, Ashok Leyland's share price increased over 10%. So market might react both the directions. As a summary, global momentum is not good. US market, especially tech stocks, closed significantly negative. Even our IT and banks ADR also not good. Yeshi's Nifty is indicating 70 to 80 points gap down opening. However, for some reason, Reliance looks positive. Let's see. About the things to look out, Hindalco, Nalco, Cummins, ICRA rating and India Cements are some of the major Indian companies' earnings results are scheduled to release today. In terms of macro, during our market hours, between 11:30 to 12 pm, various UK inflation and its segment data is due. And at 1:30, Germany's Business Climate Index is scheduled to release. Then in the aftermarket hours, first US crude oil inventories and average mortgage rate is due. And after that, in the night, very important, last FOMC meeting minutes are scheduled to release. Coming to technical, yesterday, Nifty opened gap up of 50 points and climbed up to 18,420 intraday, but the last hour profit booking wiped out some gains. Thus, it forms small red candle with a huge upper shadow and small lower shadow. Now here, this candle is formed after a series of consecutive candles with higher high and in the uptrend. So this formation is called shooting star candle. The psychology behind this candle is that the long upper shadow represents the buyers who bought during the day but are now in a losing position because the price dropped back to the open. It's kind of indicating a potential price stop and reversal. Now, if the next candle's high stayed below the high of this candle and it closed below the close, then it would confirm the price reversal and indicate more fall to continue. So that's the candlestick analysis. However, Nifty continued higher high, higher low formation for the second straight session, which is a positive sign. So if the Nifty consolidates and sustains above 18,300, then further up move towards 18,500 can't be ruled out. On the other hand, selling pressure is likely to increase below 18,300 and Nifty could decline until 18,200 to 18,175. Then in case of Bank Nifty, it opened marginally positive but continued its consolidation in a narrow range of 150 points for most part of the day. Thus, on the daily chart, it forms the short red candle that's vertically centered between the upper and lower shadows. This formation is called spinning top candle, which is indicating the indecisiveness among the price movement. Now here, Bank Nifty has to hold above 43,750 level for an up move towards 44,144, then 44,250 levels. Moving on, for Nifty, based on change in open interest, significant call option unwound at below 18,300 and maximum new put option addition is also at 18,300. Thus, 18,300 is the immediate support. Then, based on overall options open interest data, 18,000 got the maximum put option followed by 18,200. Thus, 18,200 can be a good strong support today. Similarly, 18,500 followed by 18,400 got the maximum nearby call option open interest. Thus, 18,400 is the immediate resistance, whereas 18,500 is the strong resistance. In case of Bank Nifty, it's same for last 2 days, no change. 44,000 got the huge short straddle, then 43,000 got the maximum nearby put option open interest, followed by 43,500. Hence, 43,500 is the immediate support and 43,000 is the strong support for the expiry. Whereas 44,500 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me build the algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.